Okay, what's up everybody? This is Scott here with my first video of 2022, and as always, every Friday I put out a video just like this, which will show you all the trades and all the adjustments I made this past week. And also, now that I've completed my testing period for my new strategy, at this point going forward, I'm now back with my live trading account with real money. And so in this video here, you're first going to see a lot of new positions I put on, of course, because this account was completely shut down for the past few months. So I'm going to walk you through in real time the trades I made in Crocs, JD, Roblox, and Roku. I did also make one more trade in NET or Cloudflare, but I was not able to record that one, but I will still talk about it later in this video. And this one here actually already came off for a profit this morning, as you can see right there, when I bought back my 100 strike put option. And then finally in this video, I'm going to go over all my current positions so you can see where everything is at today. And I've definitely made a few mistakes already this week, so I'll talk about those as well. There definitely are some differences between, of course, paper trading for a few months and then now coming here to a live money account. Now, as always, before we dive in here, in case you are brand new to the channel, I just want to let you know that you can find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Okay, and so with that being said, I'm going to stop here and play a few clips that I recorded from this past week that again will show you all those new trades I made. And I believe we're going to begin here with my Roblox position. So let's get started. Okay, today is Monday, January 3rd, and the stock I'm looking at here for my first trade of 2022 is going to be in Roblox, which, if you don't know, it's basically a company that develops and operates an online entertainment platform. They essentially have an application that allows users to explore 3D digital worlds and things like that. And so there are a few reasons why I picked this stock in particular to make a trade on. The first of which has to do, if we come down here, with the implied volatility for this stock. And so unfortunately, this company has not been around long enough for the IV rank and IV percentile indicators to work quite yet. So that's why here I'm just using the regular implied volatility chart. So at least for the time being, we're going to have to just use a visual sense of how elevated the current level of implied volatility is right now. So visually, I think it's pretty obvious that the IV for Roblox is definitely on the higher end of where it's been for the past year. And the actual value for the implied volatility is at 70, almost 79%. So that's actually very, very high for an individual stock. Now, very briefly, for those of you who are not familiar with implied volatility, this is simply a measurement of an expected future move for this stock. And by default, it's typically looking at 1 year in the future. So right now, the market is pricing in an expected move for Roblox over the next 1 year of up or down by about 79%, which obviously is a very large expected range. And so the very important thing to understand here is that implied volatility is baked into the prices of option contracts. And the higher the implied volatility, the greater the option prices will be. So that's why I, as an option seller, always look for stocks with high implied volatility, both in terms of a simple numerical value, and then also for that individual company, I want to see the IV on the higher end over the past 1 year, right? Because obviously, as you can see here, the implied volatility for Roblox does fluctuate quite a bit. And looking at the past 12 months, it got down to a low of only about 50%. So at this point in time, the options on Roblox are going to be much, much cheaper than they are right now. So basically, as an option seller, I always want to find the most expensive options I can sell, because of course that's going to make for the biggest profits. Now, if we come up to the price action chart, and let me go ahead and move this down a little bit here, and we'll zoom in a bit. And so as you can see down here, this was their most recent earnings announcement back on, looks like November 8th. And it appears that this earnings announcement was very exciting because, as you can see with the price action chart, Roblox exploded for many, many weeks after that point, all the way to a high of about $141 per share. But now recently, the stock has come almost all the way back down. And typically, I like to be a contrarian-based trader. So that means when stocks get killed, when they go down a lot, I like to get bullish. And then conversely, when stocks go up a lot, I like to get bearish. So for example, around this point, I would have sold perhaps naked call options and gotten bearish on the stock. But now that Roblox has fallen by about 40%, I'm now decently bullish on the stock, at least for the short term. So that means what I'm thinking about doing here is selling an out of the money put option, because that will give me a nice bullish bias to my trade. And also, if I pick my strike decently far out of the money, that gives me some cushion in case I'm wrong, right? Because when you sell put options, as long as the stock stays above your put strike, you can make the full profit by the expiration date. Now, another very important thing I look at for my particular option trading strategy is I want to see a very tight bid-ask spread for the actual stock itself. So right now, as you can see here with Roblox, the difference between the bid and the ask is only about 10 cents or so. That's pretty tight. And my guess is that's due to the fact, if we come to the trade tab now, due to the fact that there is a lot of volume on this particular company. So almost 8 million shares already have traded, and the market's only been open for about an hour and a half or so. And the reason why this is all super important is because if I am super wrong on the trade, if Roblox just tanks in price and falls below my put strike, at that point I'm going to short 100 shares of the stock, because that will totally cover my obligations on the contract if I ever do get assigned on it. So therefore, with a very tight bid-ask spread, that means if I ever do need to short the stock, I will get filled at a pretty good price. Moreover, I do also want to make sure that the stock is easy to borrow as well, because when you short stock, you actually borrow it first from your broker, you then sell it immediately in the market, and then at some point down the road, you buy the shares back and return them to your broker. So if instead this was HTB or hard to borrow, I would probably stay away from the stock, because I don't want to run into the situation where I want to short the shares and I cannot even get filled on the order. That would be a problem. And so with that said, I think everything looks good here on this trade in terms of the setup. So we'll come down to the actual option chain. For this trade, I'm in the February expiration cycle with 46 days left to go. And specifically, I'm going to sell the 90 strike put option. This one has a 30 delta, so it's going to be decently bullish. And as I said, I do have some nice cushion here built in with the trade. So Roblox right now is trading at about $101 per share. So that means this stock can fall over $10 before it even reaches my put strike down here. And like I explained, it's only if the stock falls below my put strike, it's only at that point where I actually need to do something, short the stock in that case. So with that said, we'll go ahead and click on the bid price here, and that brings up the sell order down below. Just going to sell one contract for this trade. And as you can see with the option, the bid-ask spread is about 15 cents wide, so I'll try and get filled right in between. And now it just changed to 20 cents wide. So I'll come down here and I'll set my price to $6.25, and we'll see if I can get filled here. Go to confirm and send. Buying power effect for this trade is about $928. That's totally fine. That's well under 5% of my account. So we'll go to send. And there we go. Just got filled at exactly $6.25. Awesome. Great. And so final step is to create my automatic GTC closing order to buy this contract back for ideally half price. So down here is the order, just going to buy back the same contract, 90 strike put option. And like I said, I'll try and do so for around half price. So half of $6.25 is about $3.10, just rounding down a little bit there. Then we'll make it a GTC order so it's always in place. And then we'll confirm and send that one too. All done. So this means if we come back to the charts real quick here, this means if Roblox can bounce a little bit in price, that's what I'm hoping for in terms of a directional move. And then also, if implied volatility can contract a little bit here, because typically implied volatility likes to remain around a long-term average. So right now, as I showed you, the IV for Roblox is on the higher end of the range over the past year. So I think the chance of the implied volatility coming back down, maybe at least to around 65%, is pretty good. So the point is, if Roblox can move up in price and implied volatility can contract, both of those things will reduce the value of the put option I just sold. And then of course, you also always have time decay working in your favor as an option seller too. So also as time marches forward, that also will decay the value of the option too. And of course, if all three of those things can cut the value of the put option in half, at that point my GTC closing order will get executed and I'll be taken out of the trade for a nice profit. Okay, I'm back here still on the same day, Monday, January 3rd, and the next stock I want to trade is going to be in Crocs. So this is the company that makes those funky looking sandals, and I've also traded this one many times in the past. It's typically pretty liquid, both in terms of the stock itself and also in terms of the options. And also, if you come down here, the implied volatility for the stock is also very, very high right now. Now, because this company has been around for quite a while, on this chart I can use the IV rank and IV percentile indicators as well. So this graph down here is still showing just the regular implied volatility for Crocs, but again, because we have more data with this company, that's why these two other metrics are currently working. So right now the IV rank is 52%, that's pretty good, and we're also seeing an IV percentile of 81%, that's very, very good. And basically both of these two metrics here are simply meant to give you an objective numerical perspective of how high the current IV is right now for Crocs. So the actual implied volatility is 62%, but Is that high for Crocs? Is that low? Is that kind of average? What is it? Well, like I said, according to the Ivy rank and Ivy percentile, 62% for Crocs is on the higher end. And you can also certainly see that just visually by looking at the chart. So right there is the current level of Ivy for Crocs. And if you follow this gray line back over the past 12 months, yeah, you can definitely see right now the Ivy is on the higher end over the past year. So naturally, that also translates to the actual options for Crocs. They're going to have inflated prices for the time being. Now take a look at the price action chart here. Let me go ahead and move these down a bit, and we'll zoom in right around here. So this stock has definitely been in a general uptrend for quite a while. And in a similar fashion with Roblox, in the past few months here, Crocs has gotten absolutely killed. So it's fallen from a high of over 180 bucks per share down to right now at around 130. So that's a drop of almost 30%. And my assumption here is that given what we've seen in the past with Crocs, my assumption is that this stock will recover, especially now that it has made contact with the 200 period moving average. That's this yellow line right there. So this is a very, very long-term moving average, and it definitely can act as a major support level, as it clearly has been doing over the past couple days here. And then also, if we come down here and take a look at the RSI indicator, this one will show you how overbought or how oversold a stock might be. And once this indicator gets below a value of around 30, that means the stock is reasonably oversold and possibly due for a short-term correction or short-term bounce. And then conversely, once this indicator gets above 70, the stock is now assumed to be overbought and therefore overdue for some selling. Now, I definitely do not rely on any one indicator or pretty much any indicators 100% of the time. I mostly use them to create a general assumption on where I think a stock is going to move in the next few weeks or months. And so as you can see at this point, once Crocs was considered to be overbought, look what happened with the price action chart. Not long after, the stock came all the way back down, right? And then if you look at the previous cycle, once Crocs endured many, many days of successive selling, if we now come down to the RSI indicator, it got all the way down to a value of just about 30. And then sure enough, the stock was bought right back up again. As you can see here, many, many weeks in a row. So now that Crocs has again endured a lot of selling pressure, and the RSI indicator is now down to a value of just above 30, this is also why I'm leaning towards a bullish trade here. I do think the odds favor a short-term bounce over the next couple days or weeks. So with that said, we'll come to the trade tab now and take a look at the option chain. Same thing with Roblox. For this trade, I'm going to be in the February expiration cycle, 46 days left to go. And I'm feeling pretty bullish on the stock, so that's why I'm going to sell the 125 strike put option with a 38 delta. And typically a 40 delta is as high as I will go with a directional trade. But still, with the strike being 125 and Crocs trading right now at about 130 bucks per share, I still have $5 of downside cushion. And then also we'll take a look at the bid-ask spread here on the stock. It's about 20 cents wide or so. That's not great, but not bad either. And then also Crocs is an easy to borrow stock. So that means should I need to short the stock if it falls below my strike price, my short sell order should get filled pretty easily. So with that said, we'll come down here and click on the bid price for this 125 strike put option. And that brings up the sell order down below. Just going to sell one contract. And the bid-ask spread on this option here is about 50 cents wide, so going right in between. I'll see if I can get filled at around $795 or so. So $795. And then we'll go to confirm and send. Buying power effect is about $2,000. That's fine. So we'll go to send. And no fills yet on this order, so we'll come back to the monitor tab and change my price. So right there is my order. And as you can see, my limit price is $795. Mark price is now down to $785, so I'll come down perhaps 10 more cents or so. So down here, I'll change my price to $785 and see what happens now. Confirm and send and send. And there we go, just got filled at $70.80 actually. I did have to come down a little bit more in price there. Okay, and so last step is to create my GTC closing order now. So down here, this is the order, and I'll buy the contract back for hopefully half price. So half of 780 is 390. And then lastly, make it a GTC order, confirm and send, all done with Crocs. So there we go. I now have my first two trades on for 2022, Roblox and Crocs. And actually, let me go ahead and move my Crocs position to the right category. So it's going to go to the naked put section. There we go. Awesome. So 2 new trades on, and I'll be looking for probably 3 or 4 more throughout the week. All right, today is Tuesday, January 4th, and the stock I'm looking at right here is JD. So this is a Chinese company in the online retail space. And very similar to Roblox and Crocs, this stock also has gotten killed over the past 2 months or so. And today in particular, JD is down by almost 7%. And I do think it is starting to approach perhaps a pretty significant support level, because if you come back here, back in August of 2021, JD did make a low of around 61 bucks per share, 61 and a half. And both times it got down to that point, it shot back up higher. So once again, JD is now approaching that support level once more, and perhaps we'll see a nice bounce in the stock price once it does, or perhaps it could even happen now. But like I explained in the previous clips, I tend to be a contrarian-based trader, so when I see stocks coming down in a huge way, I do like to get bullish and play for a short-term bounce. And so then also, if we come down here to the implied volatility chart, the IV for JD is spiking just a little bit today, and that's probably due to the fact that, again, this stock is down by almost 7% today, and you oftentimes do see a spike in implied volatility when stocks move down in a significant fashion. So right now with an IV of around 56%, this translates to an IV rank of 45%, that's pretty good, and also an IV percentile of 87%, very, very good. So with that being said, we'll come over to the trade tab now and take a look at the option chain on JD. For this trade, also going to be in the February expiration cycle with 45 days left to go. And also real quick, let's double check the bid-ask prices for the actual stock. As you can see, the bid price is about $63.60. Asking price is only a few pennies above that. So JD is obviously a very liquid stock, and you can tell that by the volume just in this morning. So the market's already been open for about an hour this morning, and already over 6 million shares have been traded. And so now coming down here to the put options, as I explained, I do want to get bullish on the stock, so I'm going to sell 2 put options, either at the 60 strike or the 57.5 strike. And for this trade, I think I'm going to go with the 57.5s just because there definitely is a bit more room for JD to fall more in price, perhaps down to maybe 61 or even 60 bucks per share. So in that case, just to give myself a bit more cushion in case I'm wrong on this trade, I think I'll go with the 57.5 strike. I'm obviously going to take in a little bit less in credit, but I'm totally fine with that. So now I'll go ahead and click on the bid price for this option. That brings up the sell order down below. So for this one, I'm going to sell 2 contracts because JD is only about a $60 stock. And we'll see if I can get filled at around 213 bucks per contract. Go to confirm and send. Buying power effect for this trade is about 1,300 bucks. That's fine. So we'll go to send. And there we go. Just got filled at exactly 213. Awesome. Great, and so last step, you know the drill. I'm going to set up my automatic closing order to buy these contracts back. So down below, this is the order. Going to buy back both contracts, and I'll try to do so for half price. So 50% of 213 is about 106. And then lastly, make it a GTC order so it's always in place. Confirm and send, All done with JD here. Okay, I'm back here still on the same day, Tuesday, January 4th. And one more stock I do want to trade today is going to be in Roku. The main reason is because if we come down here, we're seeing a very nice spike in the implied volatility. If I could expand this chart up, there we go. So this is what I'm talking about. And definitely from a visual sense, just by looking at this implied volatility chart, the IV right now for Roku at around 68% is definitely on the higher end of where it has been for the past 12 months. So basically, I think the odds of a contraction in the IV over the course of the next few days or weeks is pretty decent. And so right now we're seeing an IV rank of 58% and an IV percentile of 79%, both of which are very good. Now, if we zoom into the price action chart and we take a look at where Roku is right now. So at the moment, Roku is selling off pretty hard, around 5.7%. And that's probably why the IV is spiking for today as well. Now for this one, I'm definitely a lot more directionally neutral. As you can see, lately Roku has been pretty much trading sideways, and perhaps this price action might continue for the short term. So basically what I'm thinking here is selling a short strangle, which is a combination of selling an out of the money put option and then also an out of the money call option. Now I do think perhaps if Roku does continue selling off, it might get down to a support level, at least the way I see it, at around, call it 200 bucks per share. So I'm going to try and sell my put option with a strike a bit below that point. And then on the call side, I definitely do think there is some overhead resistance right around, call it 240 bucks per share. So again, I'm going to pick my call strike such that it is above that point by a little bit. And also for this trade, if we come to the trade tab now, it's going to be a little bit different. As you can see here, I am in the January expiration cycle, not February. And that's because the February expiration cycle does conflict a little bit with the Roku earnings announcement. So for example, if we actually come to the Analyze tab here and then go to the Earnings sub-tab and type in Roku, as you can see here, the earnings announcement is on February 17th. And like I was saying, if we now come back to the Trade tab, the February expiration date is on February 18th. So there is some very slight overlap, and normally that would not be a huge deal, but typically what happens as you approach earnings is the implied volatility will continue to expand. And that's not going to be a good thing for me as an option seller because that's going to increase the prices of the option contracts, and I want them to decrease. So that's why I'm going to go into the January expiration cycle with only 17 days left to go, because perhaps within that time period, we might see a minor contraction in the IV from this little spike here that occurred this morning, right? Perhaps if Roku recovers a little bit from this point, or perhaps if it just trades sideways and things kind of calm down a bit, I would definitely expect to see the IV come down by a somewhat significant amount. And then also, of course, because there's only about 17 days left to go, the time decay on all these options is going to be very high. So right now, as you can see here, I am considering selling the 247.5 strike call option alongside the 197.5 strike put option. As I mentioned, I wanted to pick my strikes such that they were a bit beyond the support and resistance points or levels that I identified on the charts there. And then as you can see right here under the theta column, the time decay right now for this one contract is about $26 per day. So that is definitely a decent chunk of the price for this put option. And then same thing with the call over here. The theta value is 26. So again, every day that passes, the value of this put option is going to drop by a decent amount. So with that said, we'll go ahead and right click on the call option here and go to sell and then strangle. And there we go. Here's the order. Just going to sell both of these contracts, 247.5 strike call, 197.5 strike put at the same time. And the total credit I will receive for selling both these options is about $750. That's pretty darn good. So I'll try and lock in that price exactly. That is the mid price for this strangle. Go to confirm and send. Buying power effect for this one trade is about $2,200. That's fine. Still under 5% of my total account value. So with that said, we'll go to send. And no fills yet on that order, so we'll come back to the monitor tab here and perhaps change my price a little bit. So right there is my order, and as you can see, my limit price is $750. Mark price is $752, but the markets on Roku options are a little bit wide, so perhaps I'll come down a few more pennies. So cancel and replace, and we'll come down to maybe $740 and see what happens here. $740. There we go. Confirm and send, and send. Great. And there we go. Just got filled at exactly $740. Awesome. So then last step is to create my GTC closing order. Let me do that real fast here. And here we go. There's the order. Just going to buy back both of these contracts. And of course, I'll do so for half price. So half of 740 is 370. Lock in that price, make it a GTC order, and confirm and send. All done with Roku. Okay, welcome back. I hope you enjoyed those few clips there. And so now finally in this video, let's go over my current positions and also talk about the few orders I made this morning. So actually, let's start off first with my Roblox trade this morning. This one, I unfortunately made a pretty big mistake on. So as you saw in one of those previous clips, I sold the 90 strike put option. And the way I manage short puts, if the stock falls below my put strike, is I will short 100 shares of the stock. Now, if we come to the charts real quick here and go to RBLX, and then come over here and I'll zoom in a bit. So again, keep in mind, my put strike was right here at 90. And then as you can see, there were a few days here where Roblox did fall below 90. And so this stock did bounce through my strike a few times and I lost a little bit of money, not a huge deal. And then yesterday, right before the market closed, Roblox dove below 90, so I shorted 100 shares, and then the stock closed just below 90. So this can be a pretty precarious situation because if the stock gaps up overnight, I could lose a lot more money on those short shares than I would like. And I noticed after hours, the stock was indeed starting to move higher and higher in price. It got all the way up to about $90.50. And so again, me being paranoid, I placed an after hours order to buy back my short shares because I assumed, especially after the nosedive the stock took this week, that come today morning, the stock would gap higher. And unfortunately, the exact opposite happened. It gapped back down lower. So I kind of screwed myself there by messing with my trade after hours when I should not have done that. And in fact, during my testing period for the past 5 months, I never did that once. So shame on me for deviating from my plan here, and that's why once the stock gapped down lower and kind of screwed up my trade, that's why I just took it off and cut my losses. But then as you can see here, I placed a brand new trade. In this case, I sold the 80 strike put option and again did so for around 600 bucks, just like I did with the 90 strike put option a few days ago. And so I'm going to try here again on Roblox. Just completely reset my trade, a brand new option with a new strike far below the current stock price. And we'll see if I can make back a decent portion of my losses that I took on this option here. And then like I mentioned at the beginning of this video, I did also place a trade in NET, which is Cloudflare. As you can see, initially I sold the 100 strike put option and I bought it back this morning for a nice little profit. So this trade here, if you come to the charts very briefly, go to NET. This was only meant to be a very simple reversion play. I saw the stock was selling off 1, 2, 3, 4 big down days in a row, and I was hoping to see just a small little bounce and take some small profits. So once the stock got up to its high for today of around 110 bucks per share, that's when my GTC closing order was executed and I was taken out of the trade for a small profit. So then we'll come back here to the monitor tab and go over my other current positions here. Starting off first with Crocs. As you can see here, I have not made any adjustments on this trade yet, although I believe yesterday the stock was bouncing through my strike a few times and I did lose a small amount of money. I think it was around 100 bucks or so, and now the stock is starting to take off to the upside. So I believe if you come to the charts real quick here, go to CROX. So we're down by 11 cents today, but the stock is now up to about $128.50. And it looks like it definitely is trying to fight that 200 period moving average right now. So we'll see what happens over the next few hours or days. I really do hope though that Crocs is able to bounce a lot higher and perhaps start a new little bull run. So that's Crocs. Let's come back. Next up in JD, this one is looking really good so far. I'm up on this one just shy of 200 bucks, so I must be getting pretty close to my profit target at this point. That's very nice. And then we've already talked about NET and Roblox. So lastly here is my trade in Roku, which has definitely screwed me pretty badly this week. So yesterday in particular was a very rare case where the stock was just relentlessly bouncing through my put strike here. I mean, for literally 3 or 4 hours, this stock was pinned perfectly at 197.5. It was pretty amazing, and I don't think I've ever seen something like that before. Now, fortunately, because this stock is very high priced and also has very high implied volatility, I knew that at some point it was going to move, and today, that's exactly what has happened. Roku is down right now by about 10 bucks, which is a pretty big move. And also just before the close of the market yesterday, it did start to sell off a little bit, and that's why I shorted 100 shares. And I'm continuing to hold those shares short this morning. That being said, as you can see right here with my P&L year to date, I obviously have a lot of losses to make back. Now the good news here though is that most of these losses that you're seeing now are simply due to the extrinsic value that is still remaining in the options of my position. So for example, if we come to the trade tab and go to Roku really quick here, and for this trade again, I am in the January expiration cycle, only 14 days left to go. So obviously, as you can see here with my call option, which is now super far out of the money, and actually one thing to mention is I did roll down my call option yesterday as well to take in extra credit. So basically, I bought back the 247.5 strike call option. This is the one I sold initially, and then I sold a new one right here at the 222.5 strike to, again, like I said, take in additional premium, which I believe amounted to a little over $300. But like I was saying, even this new call option, which is still pretty far out of the money, obviously still has some value to it. There's still about 130 or 40 bucks here of extrinsic value. And same thing with my put option, which is now pretty far in the money. With Roku trading right now at about 184 bucks per share, that means if today was the expiration day, this option would only be worth about $1,300 or so. But obviously because we're still 2 weeks away from the expiration, that's why this option is still around $1,900. So point being is if I do not lose any more money with Roku bouncing through my strikes, then as of right now come expiration, I'm actually looking at a loss of only just under $300, not $1,000. And of course, if Roku does bounce through my strikes a couple more times between now and the expiration date, there's still plenty more adjustments I can make to this position to, again, take in even more additional premium. This trade is by no means over yet. And so with that being said, that's going to wrap it up for this video. I hope you enjoyed it. And please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.